Hello guys. After my last analysis video, someone in the comment section actually asked me or pleaded with me to analyze USDJPY. And apart from that, I can see also an opportunity for a short buy on USDJPY. So if you stick with me to the end of this short video, you might just be able to catch that opportunity. So I'm currently on the monthly time frame on USDJPY, and as is customary, I already have my key zones mapped out. And like I always say, if you do not know how to draw this horizontal rectangular bars on your chart, which signifies the keys, indicates my key zones, you can check out the video on the channel on how to do so. I already talked at length about that. So what do we get to do also on this monthly time frame aside drawing our key zones? We try to get our directional bias, and that means we'll get to look at the market structure. So if we are to do this, we can see that for a long time now, USDJPY had been giving us higher highs and higher lows. And we know that when the market gives higher highs and higher lows, it means that it's in an uptrend, or the market is bullish. However, for some time now, USDJPY had gone into a range. In other words, it has been moving between this resistance zone and this support zone. So, and currently price is at the resistance zone. So if I should bring out what I just mapped out, this is what USDJPY has been doing for a very long time. So we can say that although USDJPY has been in an uptrend for quite some time, it is currently ranging, moving between this resistance zone and this support zone. And of course, we all know that in the ranging market, we try to buy from the support and we sell from the resistance. So as for our directional bias, we can say that USDJPY is still very much bullish. However, price is currently at a very strong resistance zone. The question now is, does that mean we should start looking for sell? For us to make that decision, we have to look at what the candlesticks are currently doing. We can see that even though the momentum of the bullish candle gradually reduced when price got to this resistance zone, the basic thing still remains that buyers are still in control of those markets, which means we only start looking for selling opportunities from this resistance zone when we start seeing the presence of red candles. So the question now would be, what should we decide to do at this point? There are two things that you can possibly do. Either you sit on your hands, or we look for short buying opportunities depending on what we see on the much lower time frame. So as for my directional bias, it's still going to remain bullish until I start seeing the presence of sellers at this resistance zone. So the next thing would be to go to the the weekly time frame, which is the next lower time frame. And on those weekly time frame, we can see the range playing out better for us to see. So we can see price moving between support and resistance zone. So like I said, the expectation would be for price to start coming downwards, but we can't start looking for sales until we start seeing the presence of sellers. You can see the beautiful range that the market has been in for a very long time. So if we're able to catch selling opportunity here, then it's going to give us a lot of opportunity to make money coming all the way down, as that would take a long time to happen. But again, if we go closer to see what price is doing here, even though we had like a doji candle here is signifying reduction in buying momentum, we can see that this green candle here is still indicating that buyers are still very much in control. Now, even though we're looking at a ranging market, the bigger picture, the current arm of the range, or the current part of the range that we're looking at, is bullish. In other words, the buyers are currently pushing price upwards. So there isn't much to go by on the weekly time frame, aside the fact that it confirms what we already saw from the monthly time frame, that buyers are still very much in control of those markets. So we'll go down to the daily time frame. Now, the daily time frame, I call it the tradable time frame. This is where we can likely look for any opportunity for probably a short buy, or start seeing indication that sellers are now in control of the market, but that doesn't seem to be the case yet. If I add one of my analytical tool, which is like a trend line, we can see that we are still very much in an uptrend. And if we look at the market structure, we have higher high, higher low, higher high, higher low, a higher high, higher low. Price gave us like a double top, but still pushed to give us what, a new high. So if I zoom in for us to see closer, we can see that this was a high. This level has just been what, taken out by price, and price had come back to do what, retest. So what do I do in this case? We can see that buyers are still pushing price up. I can now add another analytical tool, which is the Fibonacci retracement tool. And for those that have been following me, there's what I call the Fibonacci retracement tool golden zone, which is the zone between the 0.5 and 0.618. And if you look at it, we can see that I had drawn this level where price broke out independently, even before including my fib tool. But we can see that, let me change the color of this. We can see that this golden zone is aligning beautifully with where price broke out from, which gives it for me more credence that when price comes back to it, there's every likelihood that price is going to push up. So now let's look at the things that we already have. Even though price is close to a resistance zone, we can see that on the much lower time frame, price had just pushed a bit above this resistance zone, and it had come back to do like a retest. And in this case, it is coming back into what, our Fibonacci retracement golden zone. We can see that we have like a bullish pin bar here, and presence of more buyers pushing price upward. So like I always ask, having this setup, a trend line, Fibonacci retracement with price in the golden zone, and then of course a support level which we drew independently before even drawing our fib zone. What do we now do with this setup? Remember, like I said a possible short buy, because we are at a strong resistance zone from the monthly time frame. It wouldn't make sense to start pumping in a lot of buys here and hoping that price is just going to shoot all the way up or continue upwards. Anything can still happen at this region. Price sellers can still decide to push price upwards, because let's not forget, this market has been ranging for a very, very long time. So the next thing would be to go to the H4 time frame. Now on the H4 time frame, we can see now that the setup becomes much more clearer. So especially for those of us who are day traders, we can actually get something from this particular analysis. Now, what do I mean? We see price giving us lower lows, lower high, lower low, and then all of a sudden there's been like a break of structure. Now, break of structure where we go to the 1 hour time frame, which would be like a possible entry time frame. See if there are things we can see and say, oh, maybe it's time for us to start taking our buy trades. So the first thing I'll do would be to include what I refer to as a counter trend line. Now, if we had caught this earlier, this would have been a perfect place to enter this trade, in the sense that we have like a clean trend line break and then a retest. So at the appearance of this doji candle, I would have simply taken my trade here. But however, another thing we can see is like an inverse head and shoulder. We know that an inverse head and shoulder pattern is a strong bullish reversal chart pattern. So the question would now be, is it that we've totally missed out on this trade? I don't think so, because we still haven't gotten. I'm making this video now in the London session. So I would say probably before the start of the New York session. This is the neckline. Let me mark out the other parts of this inverse head and shoulder pattern. So for those of us that might have not spotted it, this is the head, the left shoulder, or rather the right shoulder, and then the left shoulder. Of course, we know that once the neckline breaks and then there's a retest, then we can start looking for our buying opportunities. So this is the H1 time frame. If I were to wait to take this particular asset trade, we already missed out on the retest of this trend line here. The next best thing to do would be to wait for a proper pullback if we're able to get one, and then I'll be waiting to enter the trade here with my stop loss beneath this right shoulder And then, like I said, it will be a short buy. But notwithstanding, even with it being a short buy, we can still get a good risk to reward of 1 to 3. So what we'll be doing now, like I would say, don't jump into the trade because of fear of missing out. All you need to do now, I can even include another trend line here. I normally do not trade like this, but I'm doing this for, apart from the fact that somebody asked on the comment in the comment section for me to analyze USDJPY, I'm also doing this for those who trade on the lower time frame. So the only way I'll be risking or trying to take this trade would be to wait for this pullback. Like I say, I'll repeat again, wait for this pullback, and then you can jump in and take your buying opportunities here. So this is my simple take on USDJPY. If you are lucky enough to come across this before the opening of the New York session, you can monitor this closely. And once you get this pullback up into your trade and make some money, like I said, I did this for some. I hope the person gets to see this analysis on USDJPY and watch this video early to gain from it, because he or she asked me to do this. So you can also drop your request in the comment section as well. Don't forget to like, share, and subscribe. Do enjoy the rest of your day. I hope you catch this trade and make good profit from it. Cheers.